and we have three excellent speakers to address this. We've Minister for Finance, Public Expenditure and Reform, Paschal Donohoe, who I hope is getting more than 5 hours sleep a night. We have Dr. Barra Roantree, who's a research officer at the Economic and Social Research Institute and the recent winner of the Barrington Medal, to the jealousy of all other young economists. And Dr. Gemma Tetlow, who's the chief economist of the Institute for Government in the UK. So the way these sessions go is that everyone has 15 minutes, and then at the end of the 15 minutes, we move on to the next speaker, and then we take questions in the Q&A part of the Zoom software. So if everybody doesn't use the chat, thank you, Emma, for correcting me. If everybody doesn't use the chat and just uses the Q&A function, things will be a lot better. So with that, Minister, if you're ready to go, we'll start with the 15 minutes, and I'll give you a 2-minute warning or something.
Okay, well, good morning, everybody, and good morning to you, Stephen, and thank you for the opportunity to address all the participants here this morning regarding where the government stands at the moment with our economic and social response back to COVID-19. What I plan to do in my time with you is give an update on our calibration of the impact of COVID-19. Secondly, outline to date the economic interventions that have been made. And thirdly, give the conference a sense of some of the key issues that we are reflecting on as a government, and then a thought in relation to each of those key issues. And I'm going to touch on 4 of those issues. So if I begin with my first theme, which is the impact of COVID-19 on the Irish economy to date, it is timely, of course, that I'm speaking to you about this topic because on Tuesday, we published the Stability Programme update for the European Union. And then yesterday afternoon, we had a debate on that draft publication in Dáil Éireann. And while there is little in the report from a figure point of view and a macroeconomic point of view that will come as a surprise to anyone, it is still a very, very stark description of where we stand with the Irish economy and our evaluation of the global and European economy as well. And of course, what is of paramount importance to me is that behind each of the figures that we are touching on in aggregate in that population, there is a life, a business, a family, a parish, a community that has all been affected by this disease with a scale and with a speed that is simply without precedent for many generations of politicians, policymakers, and analysts. In terms of the scale and speed of the impact, we are indicating at the moment that we believe that the in-year impact of COVID-19 will be a decline in gross domestic product of around 10.4, 10.5%. We are indicating that for the entirety of the year, on average, we expect to see an unemployment rate of 14%, with a peak that we are in now and will see materialize further of 22% of our jobs market. From a national finance point of view, the scale of change is no less challenging, where we delivered a surplus of 0.4% of our national income last year. That surplus was due to accelerate considerably this year, despite the budget that enabled that, or would have enabled that, being the last budget before a general election. But as opposed to delivering a significantly higher surplus, we are now expecting, on a no policy change basis, a deficit of 7.4% of national income. And the conditionality behind that deficit figure is first, that is on a no policy change basis, so does not reflect additional policy choices that this or a future government may make. And then secondly, that it is based on certain criteria in relation to how we expect the disease to develop across 2020, and certain assumptions in relation to the sequencing of our public health measures. Because of that very uncertainty, in the document, as we published it, we made clear that it is better to think of this as a scenario as opposed to a prediction or forecast. And we noted that it is only due to a legal requirement of the stability framework that requires us to give point forecasts that we are actually giving a point forecast. So this is a forecast that is couched in very significant uncertainty, which I'll come on to in the third part of my words to you. All that being said, I am absolutely certain that our recovery and that our economy can recover from this. I am certain that we can create jobs again, that we can create income again, and I'm certain that we can go back to a normal, but that normal is going to be different to the normal that we left 6 weeks ago. But in that normal, as we create that as a country, an economy, a society, and as a government, I have no doubt at all that we can create a normal that is again capable of creating jobs, income, and a good standard of living for our country. But the path to the creation of that is going to involve some very important and very, very significant policy decisions that will need to be made both by this and by the new government. In relation to the second part of my address to you, I want to reflect on what we have now done and my thinking regarding what will need to be done in the coming period. The first part of our intervention was an intervention in income support and protection in our economy that is simply without precedent in the economic history of Ireland, in terms of what we did institutionally, in terms of the speed with which we did it, and in terms of the impact that it has had on income. And this was an intervention that was put together over a number of days, and in particular over a single weekend, because of the speed with which the virus was moving and because of the immensely destructive impact it was having on our economy and on citizens who I serve. That set of interventions had two key features to it. The first one was the introduction of a pandemic unemployment payment, and in line with that was the subsequent decision to increase that pandemic payment to €350. We made the policy choice to bring in a new payment because we did not have the capacity to process the hundreds of thousands of applications that were registered with us over a number of days. And if we had put that through our normal systems, we would have faced a situation of many citizens either receiving a very low level of income support, potentially some not receiving any at all, though I think that would have been few, but that risk was there, and facing and receiving a low level of income support, initially at least, after waiting to get that support, in the context of having them lost jobs that they understandably would have thought to have been secure, literally over a number of days, and with no indication that that was going to happen. So that led to the government decision to bring in the pandemic payment. And then after some reflection and evaluation from myself and Minister Regina Doherty, and then both my departments and then her department, we quickly formed a view that we would have to look at a higher level of income support than we had initially had in place. And that level of income support of €350 is approximately equivalent to the combined level of income support that somebody would get during a normal time in our normal social welfare policy that would have had an adult codependent with them. So that intervention, done very, very quickly, to give a sense of the institutional work involved in it, involved the processing of a number of applications that at our normal rate of work would have taken many, many weeks to do. And all of this was done in a number of days, with one of the things we needed to avoid happening were our intro offices facing situations that would have made them very difficult to manage because of the number of applications they would have needed to manage. And I will forever owe a debt of gratitude to our public and civil servants in those centres for the way they worked and the work they did over that week in particular. The next intervention that we needed to make then was the wage subsidy scheme. Indications that we were receiving in real time, and that feedback that I was receiving myself were indicating a very rapid and very significant closure of very important parts of our economy that were creating the prospect of existing and a projected trend, seeing our live register move in excess of 1 million citizens. And we began over an afternoon to see what a number of other governments were doing. But at that point, they were making statements, but the detail of what they were doing and the actual operability of what they were doing was unclear. So we made a number of decisions. The first decision that we made is that if we didn't intervene directly in income, funding and delivery for the Irish economy, we were going to experience a degree of SME and unfortunately large employer closure or response that would have been exceptionally serious. And we decided we had to see how we could intervene to either stop it or defer it for some companies to create the economic space to begin to plan for how we will handle all of this. The second decision that we made is that we wanted to do that in a way that would explicitly retain the link between the employer and the employee. And we formed the view that this was of preeminent importance regarding how we would deliver that. And then the third thing that we decided is we had to be able to do this very quickly. And there was, in fact, a risk that if we did something, but then could announce something, but then actually couldn't deliver it, that of itself would have an economic consequence that we needed to avoid happening. But of course, we were trying to figure out how to do this at a time our intro offices, the Department of Social Protection, and our LEO capability, the local enterprise offices, were already at full stretch. And then finally, we had to make a choice in relation to what that level of income intervention would be. So that led to a number of really important decisions. We decided to do it through the Revenue Commissioner. And the Revenue Commissioner, in an act of great public leadership and service, and the chairman of the Revenue Commissioner and his coding team I want to publicly recognise the quality, amazing quality and leadership they displayed across that period. And I've done this in the Dáil, and I want to do it again. They acted with an imagination and with a speed that was a real act of public service. Because what we decided to do was re-engineer key IT systems in the Revenue Commissioner to allow them to pay income as opposed to tax income. And then we decided to do this for up to 70% of income. But we made a number of choices that are important to me regarding recognizing that if an employer can still pay, that the income intervention from the state will then be tapered to reflect that. The cumulative cost of these interventions is exceptionally significant, and it is one we can sustain for a period. I'm absolutely satisfied it was the right thing to do. In the absence of doing it, the social and economic consequences of not doing it could have been exceptionally serious. And we acted to prevent that happening. And we acted because it is the duty of a state at a time of intense strain for its citizens to reimagine how you intervene. And that's what we did. And we made a number of changes in relation to that scheme there a week ago to respond back to further issues that are developing. And then that leads on to the concluding and final part of my words to you, which is to give you a sense of what we are considering at the moment and a thought in each of those consideration areas. As big as that set of interventions were, and I'm not touching on liquidity supports, grants that have been put in place by the Department of Business, Enterprise and Intervention. As big as that combined set of interventions have been, I of course absolutely know the scale of challenge that is coming and what may yet need to be done. So here is 4 areas that we are reflecting on at the moment and analysing as we look at how we're going to move first and move again. The first one is the concept of a budget constraint. At some point in dealing with all of this, a budget constraint will re-emerge again. I have views regarding the timing of it, the level of it, and it will remain to develop regarding if it develops in the way that I expect that it could. But as we work through this economic emergency, a budget constraint at some point will re-emerge. And that is more likely to re-emerge from what happens within the financial markets than it will be from what may happen, for example, in the fiscal architecture that we're anchored in within the Eurozone. Because we're already seeing significant revisions in relation to that fiscal architecture. But at a point in time, and potentially with speed, that budget constraint will re-emerge. And of course, any government, any country, and in particular, the government that I'm a member of, and myself as Minister for Finance, given all that I have gone through in this issue in the past, we need to be looking at ensuring that all that we are doing and the combined cost of us, combined with the dynamic effect of it on our economy, that we're on the right side of that budget constraint. And that, of course, is a really, really important and vital issue. And I noted this yesterday in my contribution on the Dáil, when commenting on the Stability Programme update, I said that over time and at a point, our deficit will need to be reduced and we will need to move to a position of balance again. And the need for that is demonstrated by what is happening at the moment, where our state is able to access funding, the enablement of which is not only what the European Central Bank has decided to do, but is also a reflection on the current creditworthiness of the Irish state. And that will be a vital area to navigate through in the coming period. Secondly, will be the international and European economic architecture within which all of this happens. It is evolving at the moment. The decisions of the European Council yesterday evening are another step in that journey. But if I look at what has happened on a European level to date, the speed of intervention of the ECB, the extended Eurogroup decisions of the last week, are all efforts by the European Union, which is first and foremost a political construct, to respond back to the level of change that is underway. And while there will always be analysis and demands that will indicate that more needs to be done, I'll simply make the point that this is happening with a level of speed that is significantly different from where we have been at other points of great economic challenge. Thirdly, is the prospects and needs of the Irish SME sector and how we respond back to that in the next phase of our economic interventions. The speed of change and the level of change in our live register and the level of demand on the pandemic unemployment payment will merit further analysis at another point in the future. But a key part of what happened with the unraveling of our employment levels is what happens with Irish employers of a particular size in particular sectors, and how in the context of our public health guidelines we help them get back to a different normal is a really important issue for me. And then finally, to conclude on a broad policy note, we are operating in an environment of uncertainty that has little policy precedent. Economics is a social science. It is not physics, it's not biology, not chemistry, it's a social science. And many of its mistakes in the past, and I speak as a student of economics, though that is receding into my distant past as I get older, but much of it was anchored in mistakes regarding believing that models equated to reality. And in a globalized world in which our financial and banking sector plays such an inherent part in, we now need to be aware of the parameters within which policy decisions are being made and the difference between risk, which you can measure, and uncertainty, which of course has information gaps that are inherent in the nature of uncertainty. And work that began to develop in the aftermath of the great financial crisis, work that, for example, has been encapsulated in the recent book by Mervyn King and John Kay on this topic, is going to be really relevant in the coming period. Because for me, as Minister for Finance for Ireland, and as a member of the Irish government, and then as a member of Eurogroup, we are making decisions in an environment which is incredibly dynamic and in which our interventions are happening with a speed that, again, has little precedent. But as I acknowledge all of that uncertainty, and as I acknowledge the challenges that are there, let me also conclude, though, on a very clear note, that I have no doubt that we will be able to steer Ireland through this. And I have no doubt at all that we will build block by block a country and an economy, again, that will be resilient and that will have emerged from COVID-19. It's a huge privilege to be part of the effort involved in that. And I thank all of you for the contributions that you are making in aiding policymakers in these decisions. and in deepening our stock of knowledge and insight at such an important time. Expertise matters. I listen to experts, and insight backed by debate and analysis is indelibly important. And the economic and policy analyst community is a really important part and thread of the decisions that we're trying to make. So I'll end on that point. I'm afraid I do have a hard constraint, Stephen. I have to meet all of our employers and unions at 11:30. So I have to leave here at 11 in order to be in time for that meeting. So thanks for the invitation, Stephen. Thank you in particular, Stephen, for the incredible work that you're doing in helping our country understand many of the debates that are underway. And I hope the rest of your conference goes well.
Thank you very much, Minister. Well, then, if you have to go now, I might put the questions that are some of which are quite detailed. I probably won't read out the ones that are 2 paragraphs long, but maybe I'll just pick 3. Sandra asks, thanks again for another great line. Could I ask the Minister what the process and timelines for Budget 2021 will be? What opportunity civil society will have to input? Padraig asks...
So, who was that question
that's
from?
That's from Sandra.
Great, thanks.
Padraig asks, with the prospect of a green-tinged government, to what extent could it run counter to achieving a return to economic normality by implementing, for example, stringent carbon reduction measures? And last question, Dermot asks, maybe second last question. Dermot asks, how do you think about the balance between equity versus debt-based solutions for businesses that may need further support in the event that social distancing restrictions need to continue? Last question from Kian Toomey. In terms of extending the current lockdown, how concerned is the Minister of the potential exponential negative economic fiscal effects of another 4 to 6 weeks beyond May 5th? Yeah, there's lots and lots of other questions, but in respect of your time, Minister, I'd maybe just...
okay, well, thank you, Sandra, Porrick, Dermot and Keane for the questions. Firstly, in relation to Budget 2021, I'd have to point out there is a political process that needs to take place before we get to that point. And that is unfolding at the moment. The timelines for Budget 2021, Sandra, will be the same as other budgets. And I remember the debate that unfolded when I did Budget 2020, where many were saying, well, not many, that would be an overstatement. Some were saying we should defer doing Budget 2020 until we knew where we stood with Brexit. And I had the opposite view, which is because we didn't know where we stood with Brexit, is all the more reason to do the budget. And indeed, if we had delay in doing Budget 2020 until we knew where we stood with Brexit, it wouldn't have happened until sometime well after October. So the timing won't be changing. In terms of the processes for us, the key process is the National Economic Dialogue, which in fact, Stephen, you've been good enough to comment on now on a number of iterations. And we formed a view after last year's National Economic Dialogue that it needs a little bit of rethinking in terms of a format to make it more inclusive to those who want to participate in it and to make it more debate focused. Unfortunately, other events have got in the way of us being able to complete that work. But I would like to, in some way, rerun that National Economic and Social Dialogue in either electronically or in Dublin Castle and open up the doors of it a little bit more because I have found it an incredibly valuable process for helping influence my thinking and the thinking of my government departments in relation to budgets. Porrick, in relation to your question there about whether a green dimension to the next government would run counter to the economic needs and indeed imperative that is there at the moment. As always, these matters are a question of balance, and it does depend on where we end up with the environmental dimension to the next phase of economic policy making. And I have to say, I think it's very possible we could considerably strengthen the environmental and ecological dimensions of current policies without creating the kind of trade-offs that I suspect is prompting the question that Pádraig is putting to you and to me. But of course, there is a point in which you go beyond that, in which then environmental and ecological concerns do take precedence over short-term economic issues. And in the context of negotiating a programme for government, if that is where we end up, that is something that I would have to consider. In relation to Dermot's questions about the trade-off between equity and debt support for companies, not giving away any secrets to say, of course, this is something we're trying to think through at the moment and reflect on. That, of course, comment is anchored in my acknowledgement of a budget constraint at a point in the future. I've been involved in both equity and debt policies for lots of different companies now over the years in different roles I've done in government. So I'll just make a comment on each. In relation to equity, of course, when a government owns equity in any company, the two things you have to consider is what's the nature of the exit strategy from holding that equity? And secondly, what does the government mean? What are the consequences for government of becoming an owner vis-a-vis existing owners and potential owners of an economic enterprise? And that's something that we have to consider. In relation to debt, consideration for me is, given the low level of credit absorption that went on in our economy up to this crisis, is what is the appetite for further debt at this point, given the level of uncertainty that we face? And if that debt is to be made available, how can it be made available in such a way that it's genuinely used and of help? And of course, and this again is something that we're trying to reflect on at the moment. But in saying that I'm reflecting on it, I'm not giving an indication that we're going to be doing any of these things, because we have to decide what we're going to do for the next phase of response back, and then ultimately a national recovery plan. And then finally, to Cian's question regarding further the maintenance of the current public health guidance and what the economic consequence of that could be. Absolutely, given consideration to this, and the government and the Taoiseach is, and the Minister for Health is as well. Of course, what we also have to reflect on is what would be the effect on our economy if we moderate the current public health guidance and the disease comes back in a new way. And we are, of course, seeing this happening in some other parts of the world at the moment. And Cian, given consideration to how we manage that risk, is of course equally important to how we manage the economic risk that you identified a moment ago.
Right. Thank you very much, Mr. That was comprehensive. Are you still there? Yeah, that was a comprehensive. Here. Yeah, sorry, I just the slides just jumped up. Apologies. That was very comprehensive, and it is interesting to see just how fast the policy system reacted and importantly acted to stem the crisis as it unfolded. Yeah, we're all in uncharted waters. And thank you all for your questions and comments. There's lots of them coming in. I'm very sorry we didn't get to all of them, but the minister and the country has a budget constraint, and we have a time constraint, and we have to recognize them. Minister, if you, log out
On that
anytime.
note, Stephen, thanks again for the contribution, for the invitation, I should say.
Not at all.
We have much to learn from what we've done. We, of course, have things that we could have done differently, but we've tried to act with scale and with speed. And I've just tried to outline some of the considerations that we have for the future. And then to you and to everybody who's participating in this, stay safe, stay healthy, and obey the public health guidance, because that is the biggest thing anybody can do on an individual level for helping themselves, their families, and our country get through this. So please, everybody, look after yourselves, and we'll meet again.
Brilliant. Thank you very much. Okay, moving on to Dr. Barra Roantree. Barra, take it away.
Yeah, great. I think the slides are visible there, hopefully.
They are indeed.
Yeah, and spare people from having to look at my face through the presentation. So I'm going to talk, well, thanks, Stephen, first for organising the conference, and to yourself, Liam, Delaney, and others at the Geary Institute for putting on this set of conferences. I want to talk about one particular aspect of fiscal policy through the crisis, and that's support for individuals. So I'm going to outline over kind of around 10-15 minutes the measures that the government have taken and what impact they've had on cushioning the shock to incomes from any job losses that will arise from the pandemic and the ongoing shutdown related to that. And then I'm going to finish up with a few thoughts on, well, what if the shutdown was going to be more prolonged or going to be more intermittent than we were initially anticipating, what implications does that have for how we might want to think about the appropriate policy response? But first, I want to kind of begin by just setting out kind of the scale of the crisis, because I'm not sure until this week we've really been appreciating just how significant the unemployment shock was going to be. So to do that, I want to just plot the unemployment rate taken from the CSO series from 1998, going back to 98 through to the start of this year, January, February. And what you can see is we had about 100,000 people unemployed in the country through the 2000s. Then along came the financial crisis in late 2007, 2008. And over the course of about 3 years, job losses, the number of people unemployed rose from 100,000 to about 350,000. And it stayed at that level for about 2 years before then having this kind of long recovery that we have over the last kind of 6-7 years. And we've now kind of just at the start of this year had got back to pretty much the level of unemployment that had previously been seen in the country. What's happened if we take the data published by the CSO at the start of this month, which covers a period up to the end of March, the first kind of 3 weeks or so of the shutdown, what we can see is that the job losses have already surpassed what we saw in the level of financial crisis. If we include those who are on the pandemic unemployment payment, as I think we should, in our kind of idea of how many job losses there's been. We're up at above 400,000 by the end of March, which would suggest an employment rate of almost 17%. But we know since then there's been another several 100,000 people laid off. So if we were to add them in, and if we were to take the latest figures, pandemic unemployment figures from last week, and add them on to the unemployment numbers, what that suggests is that we've reached more than 700,000 people unemployed by the middle of April. And that would imply an unemployment rate in the order of 28%. The numbers have gone up a bit since then. The rate of growth seems to be slowing, but just I really kind of want to kind of stress at the start that the job losses far exceed anything we've ever seen before in this country. They dwarf the financial crisis and make it look tiny, and anything else that's happened, to the best of my knowledge, in the history of the state. So I think that's worth kind of just stating there, that just the sheer scale of the unemployment crisis that is currently ongoing. It's also very unevenly distributed. So if we are to, and it looks like the young are in particular disproportionately affected. So if we're to take the pandemic unemployment claims that have been made so far up to the end of last week, and we express them for various age groups as a percentage of the numbers who were employed on average through for that group last year, what it looks like is that the claims amount to more than 50% of those who were in work aged 18 to 24. So a huge share of those who were in work of young adults. And that's much larger than the other groups have been affected. So if you take that for the other groups, it's more like about 20%. It differs a little bit for each of the groups. 60 plus is less affected than those of other ages. So this really does seem to be disproportionately affecting young adults. there's not actually a huge difference in terms of men and women. So there's a higher proportion of the claims are made by men, but men also make up a larger proportion of the workforce. So if you're to scale that accordingly, the number of claims represents about 27% of male level of employment and about 24% of women. So a little bit of a difference, but not huge. The other area that does stand out as really there being a large difference is the sector. So it looks like, unsurprisingly, those working in the hospitality sector have been most severely impacted, with claims by people who say they were working in the accommodation and food sector amounting to 70% of the employment in that sector. Until recently, construction about 50%, arts and entertainment and other miscellaneous categories of 40%, administrative around the same. So there's a really stark difference in which sectors have been affected to date as well, if we're to draw on the pandemic unemployment claims. I think that's worth saying as well. This is only the pandemic unemployment claims. As the Minister outlined, the government also introduced a temporary wage subsidy scheme, and there's another several 100,000 people on those, many of whom, if not most, would be out of work if it were not for the scheme. That's the point of it. So these numbers in reality could be even higher if the government hadn't introduced that scheme. So I think that kind of sets the scene of just how significant the shock has been. And it really dwarfs anything we've seen before. And just one final figure there, that the numbers claiming the pandemic unemployment claims amount to about almost a third of the private sector employment, the size of that workforce. So that, I think that hopefully gives you some idea of the size of the shock. The government's response to that, as the Minister's outlined, has been actually very, very swift and strong. I think the speed of the response has really been the thing that stands out. The government announced some of these schemes after other countries, but it began making payments beforehand, and accommodations are due to revenue, in particular in Department of Social Protection, for managing that. So the Minister's kind of outlined what the government have done, so I won't go too much on that, but essentially there's been huge increase in income support for those who lose their job, need to take sick leave or self-isolate, in the form of €350 per week flat rate payment. There's also been this introduction of the temporary wage subsidy scheme, which pays up to €410 per week for employees who are kept on the payroll. But it's important to note that those are the new measures introduced. The existing welfare system already provides a lot of insurance, a degree of automatic stabilizers as well, in the form of job seekers benefit for those who lose their job, and provide essentially a consumption floor between that and job seekers allowance. Those who've seen their incomes decline might be entitled to more means tested benefit in the form of either rent supplement or working families payment. And also anyone who has seen a reduction in income will pay less tax. And so it's not just the measures that the government have already announced, but the existing system is doing a lot to stabilize incomes. And we published a paper at the ESRI last week that looked at how well did the policies announced cushion the income. So what I'm going to show you here is for our simulation of what we at that stage thought was a medium unemployment shock of around 600,000 people losing their jobs. And what this shows is the number of families containing an individual affected, and where their change in disposable income falls into. So without any discretionary policy changes, job losses in the order of 600,000 would leave about 400,000 families seeing a decline of over 20% in their income. That's the three bars to the left. Some families would see smaller changes. They would tend to be lower earning families who would have a higher proportion of their in-work income replaced by falling out of work. But that's the system before any policy changes. In particular, the introduction of the pandemic unemployment payment, the PUP, and the extension to the fuel allowance have really cushioned that loss. And what in particular, I think it's worth highlighting, it means that about a third fewer families will lose by 20% or more of their disposable income. For me, that's kind of the main thing that was in our report last week that we put out, to just show how many fewer families are going to lose because of these the discretionary measures the government have introduced. However, the measure is also actually going to leave some people better off, a significant number, in fact. So about almost 400,000 in this medium unemployment scenario, seeing a rise in their disposable income of between 0 and 5%. Some seeing slightly larger, but that's where most of the gains were. And those people were essentially retirees who were gaining from the extension to the fuel allowance. So that was increased by 1 month. And the purpose of the increase was essentially particular retirees who received the fuel allowance were going to be at home for longer and might need more heating capacity, and so that was kind of recognised that. So they have more income, but they also might have higher costs associated with being at home more often. But there's also contained in that, in the people better off, some low-paid workers who will get more from the pandemic unemployment than they did in work. And the reason for that is very straightforward. If you're working full-time at the current national minimum wage, 35 hours per week, say, 52 weeks a year, you'll end up with a net income after PAYE, USC, and the PRSI of something in the order of about €340 per week. So, you know, there's a lot of minimum wage workers who work less than 35 hours, a large number. And so there's going, for that reason, a lot that those individuals might end up with higher income on the pandemic unemployment payment than they did in work. And I think that goes to kind of show just how much the policy measures are sheltering the impact, and in fact leaving some with a little bit more income than they had in work. And I want to kind of finish up by then with just some comments on the design of the scheme, because so we've seen these measures do a lot to cushion the blow to income from any job losses, but they very much were kind of initially envisaged as a set of temporary supports for incomes. When I think everyone around the world had in mind that this, or most people anyway, had in mind that the shutdown might be short-lived and was needed to suppress the virus, and then we might have some type of a V-shaped recovery with things bouncing back quite quickly. Thinking, I think, has very much changed on that around the world, and now it is very conceivable that the public health restrictions could be in place for much longer than 12 weeks, or that they might need to be reintroduced intermittently. We might relax measures in a few weeks' time, but then they might need to be reimposed if another spike in the virus picks up and it needs to be suppressed again. And I think that kind of raises some important issues for how we want to think about the appropriate response. So the first bit is, the first thing that I think that raises is, it's important that the design of supports allows people to transition on and off these supports. So if there is going to be a shutdown which is reintroduced and relaxed and reintroduced and relaxed, it's important that the policy response recognises the increased volatility to people's livelihoods, that people might lose their job multiple times over the next few months. They might, as these measures are relaxed, they might move back into work, but then end up being made unemployed again. And from that point of view, I think one thing that the economics literature tells us that's very important is to avoid cliff edges in the design of any benefits. And likewise, strong disincentives to moving in and out of work. That incentives really do matter and can matter even in times of pandemic. You know, if there is a cliff edge in terms of people lose their entire pandemic unemployment payment by going back into work, that might discourage particularly some low-paid people from moving back into work, bearing in mind that they might face additional childcare costs. They might also just face the greater risk of being exposed to the virus by going back to work, and so need a greater financial incentive to re-enter the labour market if there is, and to take back up their job once the public health measures have been lifted. And so from that point of view, I think something maybe worth considering or thinking about is, do you allow people to retain their pandemic unemployment payment or some portion of that for a number of weeks as these kind of public health measures are lifted in the initial stage, so that particularly low-income people have the incentive to take back up a job? Because there is a risk that these measures might end up deterring people from taking up a job if it's safe to do so, through entirely rational reasons of you might want to expose yourself or your family to that virus. And so that, I think that's going to be something that's important to consider. Another thing that's important to consider is to recognise differential needs across the population. So as the Minister outlined, the decision was taken to have a flat rate payment because it was much quicker to get out, and that I think very much was important in the speed of the response, which really is to be commended. But there are differential needs across the population, you know. So I think one of the things that stands out to me actually is just looking at the data the other evening, and if you look at the most affected sectors, so in particular accommodation and food, for example, or about 27% of people in those sectors are renting, and that's versus 18% in the least affected sectors. And so given that the mortgage holidays have been announced and you're able to defer a payment of your mortgage for multiple months, that you know, people on mortgages there's going to face difficulties, but there's no immediate pressing difficulty. Renters, on the other hand, still are obliged to make payment on their rent. It won't be able to increase for the coming months, but they still need to make their rental payments. And I think that's maybe something important to factor into the response. And maybe now is the time to think about, is there some better targeting of income supports can be done? And renters is one group that I think stands out particularly to my mind, but the same applies for those with children. You know, at the moment, the $350 per week is a lot more generous relative to the old system for single adults, but not that much more generous for those who are dependent adult and children. So maybe it's important to think about, how do we recognize those differential needs, and what are the differential needs we need to recognize? The final thing I'll conclude on is essentially about the cost. So the direct cost of job losses from the shutdown is huge. So we had an estimate last week that the direct impact in terms of revenue, of direct tax revenue foregone and more welfare expenditure, is about 100 million per quarter for every 100,000 jobs lost. So that's really, really significant. And that excludes the impact on indirect taxes, on profit taxes like corporation tax and capital taxes. So the scale of this is huge, the costs. And there isn't any issue with the immediate financing of this. The NTMA have shown that we're well able to borrow significant sums of money at very low interest rates. So there's no pressing kind of issue in terms of the ability to finance that. But I think we do need to start thinking about how we pay for that in the long run. And one of the reasons for that is we're going to have a higher level of debt than previously anticipated. And it doesn't seem likely that we're going to have much stronger growth than previously anticipated. We had been experiencing a period of remarkably strong growth, and it seems unlikely that we're going to get a second good bounce of the ball on that front. So in which case, in particular, given the degree of public opposition there's been to any kind of public spending cuts, taxes are going to likely need to rise. I think that's particularly the case if there's increased demands for more spending after this crisis. Lots of people have been talking about potential need to address some of the housing issues that we face, housing cost issues, to maybe expand the capacity of our healthcare system. And so given that, that's a permanent increase in the level of spending, and as such can't be financed by a deficit, but will need to be financed by higher taxes in the longer run. And so given that, I think it's important to kind of flag that income tax and USC between them raise about 40% of tax revenues. And they're also, as we've shown in research published earlier this year at the ESRI, highly progressive. They're among the more progressive components of the tax system. And by ruling out any increases in those, you're imposing severe constraints on the policy space. In my mind, it makes it very hard to see how you can have a tax rise that's not regressive if you do rule out increases to income tax and USC. So I think that's something that's worth addressing kind of and thinking about initially. And what I want to finish on is, I recognize that raising taxes is often a politically difficult issue. And there maybe is some things that we can do to ease those difficulties. And one of those things that maybe stands out is a commission on taxation. So Gemma and other of our colleagues at the Institute for Government have done really interesting work that came out last week on how do you build kind of support politically for tax reform. And one of the things that they flag, and is something that's worked, I think, quite successfully here in the past, is commission and taxation, in terms of helping to build consensus around what are the possible options for tax increases, as well as what are the options for reform of the existing system, because there's plenty that could be done there. There's plenty of things that could be addressed to raise taxes better than we do at the moment. So I think that's maybe something that's worth thinking about as well, and also that these things are worth starting to think about, particularly in the policy community now, because there is going to be a need to pay for the cost of this crisis in the long run, and I think it's important that we do that in the best way we can. So I'll finish up on that, and just to summarize kind of the points that I think I wanted to raise today. The scale of this crisis is like nothing we've seen before. The government's response has been swift and sharp, and will do lots to ensure that the income shock isn't as severe as it would have otherwise been. But I think we need to start thinking about, well, what if the shutdown is different to initially envisaged? If it's more prolonged or intermittent, or we have an intermittent shutdown, how then does that change the type of response? And in particular, how are we going to pay for the cost of this crisis in the long run is something that we should start to discuss now.
Fantastic presentation, Barra. Really, really clear. I was struck by the first two slides showing the scale of it, and then the impact distributionally. I'm also struck by the fact that, in the last crisis, 2007, 2008, we didn't have that kind of analysis, and we certainly weren't able to do it as quickly. So yeah, very, very impressive presentation. Thank you very much. Let me pass over now immediately to Gemma Tetlow. I'm excited to hear your remarks, and then there's lots of questions in the Q&A. We'll come back to that. So Gemma.
Thank you very much, and thanks for the invitation to take part in today's session. I think it's really good to see academics and researchers thinking about these questions in real time, given how quickly governments are having to think about how to respond to this crisis. I guess I'm here to give a bit of an international perspective, particularly reflecting on what the UK government has done, and try and put that in some context of what we've heard about from the Irish government's response and what other governments are doing. In terms of timing, I think the sort of economic and social restrictions in the UK played out on a similar timescale to what happened in Ireland. We were perhaps a little bit behind initially in imposing some of those restrictions. And in terms of the public health restrictions, the UK government's approach initially was to try and go with a containment strategy, identifying all cases of coronavirus, testing people they've been in contact with and tracking it down. Fairly quickly it became clear that the capacity wasn't there to do that. The strategy then moved into a delay phase of trying to limit its spread. That was sometimes referred to in public debate as the herd immunity approach, and that was indeed a term that the chief scientific advisor did use in interviews with the press, although the government contested whether they were ever really trying to go with an approach of developing herd immunity. And then from the 23rd of March, severe restrictions on economic and social activity were imposed. Everyone was asked to stay at home unless they absolutely had to go out. Most businesses were shut down apart from essential services. In terms of the fiscal policy response that accompanied that, that has developed over time. We saw the first sets of measures announced in the government's budget on the 11th of March. That budget had been pre-planned for that date some weeks in advance. Obviously, it ended up happening in a context of much greater uncertainty about the economic and the public health outlook than was expected. If you look back at the measures that were announced on the 11th of March, they now look very timid in the scale of what's subsequently been announced. But that was the start of it. And then over the following weeks, the government's policy response has adapted and increased in size as it became clearer what was needed. The basic objective of the UK government's policy response, I think in line with what most other governments have been doing and in line with the weight of economic experts' opinion, really across the spectrum from left to right wing, the basic feeling is that the approach the government wants to take at the moment is to do everything it can to keep the economy on ice, or perhaps a more apt analogy in the current circumstances, in a coma, whilst the government is forcibly shutting it down such that it can then be reheated and brought back to life at the point that the government is confident that it can release those economic and social restrictions. So that's the objective of the government's fiscal policy response. It's trying to keep businesses and families going through that period of shutdown. Most of the UK government's policies have been focused on offering support to or through businesses, and perhaps in slight contrast to what we just heard about in the Irish response, less has been done in the UK to boost the generosity of out-of-work benefits. So running through the policies that have been announced so far in terms of direct tax cuts or direct increases in public spending amount so far to about £100 billion. That's about 4.5% of GDP. To give a sense of scale, in Ireland, Barra helpfully tells me that we should divide monetary numbers by about 10 to get the euro equivalent in Ireland. So £100 billion for the UK, it's perhaps equivalent to around 10 billion euros in Ireland in terms of the scale of the package that's been announced. And that's so far assuming that the economic shutdown lasts for about 3 months and those policies remain in place for that period. Obviously the cost would increase if it had to be extended beyond that. The first tranche of measures focus mainly on grants and tax cuts to the businesses that were expected to be most heavily affected by the shutdown. And in particular, that was retail, hospitality, leisure, nurseries. Those businesses got reductions in their business rates and direct grants. Over time, those direct grants were extended to cover all small businesses. The second tranche of measures that came out was government guaranteed loans to businesses. This was to try and get loans at relatively cheap interest rates backed by the government out to businesses to help them to meet some of their costs while their revenues were affected. The next tranche of measures was tax deferrals. So the UK government has allowed businesses and the self-employed to defer about £40 billion worth of tax that would have come due in the next few months, to mean that that will be paid right at the end of this financial year is currently the plan. The other major plank, and in fact the single largest plank of the UK government's response, has been wage subsidies. And this has really been targeted at trying to ensure that employers keep on their employees, even though they may not need them for the next few months. So the government introduced what's known as the Coronavirus Job Retention Scheme, which means that the government will pay 80% of the wage costs for workers up to a maximum payment of £2,500 a month. So that equates to about €715 a week. And that covers basically wages up to somewhere around the median of the UK earnings distribution. This is fairly generous in the context of international schemes of a similar sort. And this has really been the main way in which the UK government is getting help to households to ensure that their incomes are sustained, is through this wage subsidy scheme, encouraging employers to keep on their workforce, even though they may not need them immediately. And the Office of Budget Responsibility, who produced the official economic and fiscal forecast for the UK, so far estimates that they reckon about 30% of employees may end up on this furlough scheme. That scheme to support the incomes of workers was matched somewhat later, because it took the government a bit longer to figure out how to help this group, by support for the self-employed. The self-employed were a more difficult group to help, partly because the government tends to have less information on what their profits are. It's a more volatile group, and there was obviously a question about the extent to which the self-employed might need to prove that they had lost income in order to qualify for any support from the government. In the end, the government has announced a package of support for the self-employed, which actually replaces 80% of their average profits over the previous 3 years. They simply have to declare that they have suffered some loss of profit as a result of coronavirus, but they can actually carry on trading in some form whilst claiming that 80% replacement from the government. And that's available to self-employed people who make profits up to £50,000 a year. You can't claim anything if you're making profits well above that. That essentially hives off the highest earning 5% of self-employees, who actually tend to be things like partners in law firms and accountants, who the government has decided not to try and help. There were then other smaller measures to enhance ability to claim sick pay, to meet some of the sick pay costs for small and medium-sized employers. The policies have then been adapted as they go along, and probably the area of support for businesses and households that's been most controversial and is still being most looked at is the loan schemes to businesses. The government's sort of upfront stance there was that firstly they were making these loans, not grants, on the basis that it would be too costly and there'd be too many problems with a grant scheme. And they put in place a system where the government only guaranteed 80% of those loans to many businesses rather than 100% guarantees, which some other countries have put in place. There are concerns in the way that those policies are working, that it seems to be taking quite a long time to get loans out to businesses, and that some businesses are still being turned down for those loans. There is pressure on the government at the moment. Stories in the Financial Times yesterday about the Chancellor considering doing 100% loan guarantee to businesses. Obviously there are concerns there about the fact that that would remove any incentive on banks to do much due diligence on those businesses before issuing loans. That's still an ongoing debate in the UK. Putting the UK response in context of what other countries are doing, the size of the immediate tax cuts and outgoings of extra public spending appear to be fairly large in the UK compared to some other countries. I think from what I've seen, we're sort of somewhere below the US and Germany in terms of the scale of those things, but above many other European countries. The Tax deferrals that have been offered, on the other hand, are somewhat smaller than some other countries have been doing. And the loan guarantees, the scale of that package so far is somewhere in the mid-range, although the Chancellor here has said that essentially more money would be made available to guarantee loans if the demand was there. The scale of the economic impact in the UK so far is very much, as the Minister and Barra outlined for Ireland, unprecedented in scale and speed compared to anything we've seen before. The Office of Budget Responsibility, who do the official forecasts here, put out a scenario analysis last week. Again, similar to what's come out from the Irish government, that is described as a scenario rather than a forecast, in the sense that it is so heavily conditioned on uncertainty about how long the shutdown might last for, what the policy package is likely to be from the government. So that scenario assumed a 3-month shutdown with then a gradual opening of the economy over the following 3 months, but actually effectively bouncing back quite quickly in a sort of V-shaped recovery to the size of the economy that we would have expected to have before. Even that scenario implies a 13% fall in GDP in the UK in 2020. That sort of year-on-year fall, if you look at data for Britain, you have to go back to 1709 to find a year when there's been a sharper fall in GDP. That was the year of the Great Frost. I've learned all sorts of exciting things about economic history in the last few weeks. The year of the Great Frost, which wiped out large parts of the harvest in what was a largely agricultural Europe at the time. So this really is unprecedented. It's larger than what the UK saw during the Great Depression, and it's certainly larger and faster than what happened here during the financial crisis. Where that is hitting is obviously very unevenly spread. Some sectors have almost ceased to function altogether. So things like education, accommodation, food services. Other sectors are largely unaffected. Agriculture, financial and insurance services are expected to be broadly unaffected. On the other hand, there are sectors like healthcare services that are operating way above their normal level of output. Similar to in Ireland, given the sectors that young people tend to work in, the young are expected to be more heavily hit by the economic shutdown here than older groups are. However, the impact on UK unemployment is expected to be less severe than what Barra and the Minister outlined for Ireland. So the OBR scenario projections suggested that unemployment here would rise to about just over 7% this year. It's a significant increase, but below the sort of 14% figure that was just suggested for Ireland. Looking at claims for out-of-work benefits, which is the most timely hard data we have on what's happened, there was a big spike in claims for those benefits at the end of March. Something like that, claims for those benefits went up about 4.5 times the normal expected rate through the month from the middle of March through to the middle of April. But it does look, looking at the weekly figures, like that is now starting to tail off, perhaps as understanding of that government furlough scheme, which is incentivising employers to keep their workers on their books and being paid that way rather than making them redundant. I guess looking forward, as the shutdown continues, there will be a question for the government about understanding how effective the policy package is in achieving the broad objective of keeping everything on ice. Whether there are ways that that policy package could be adjusted to try and achieve those objectives more effectively, or whether there starts to be permanent economic harm emerging in ways that policymakers will be rather unable to try and combat. At the moment, the UK government in Westminster is saying that its decision-making around easing some of those social and economic restrictions is solely going to be driven by the public health considerations. And in particular, they've set out 5 tests for easing any of those restrictions, which focus entirely on the capacity of the National Health Service to cope, availability of personal protective equipment for healthcare workers, seeing a sustained and consistent fall in the death rate. And in fact, the fifth test, which is perhaps the strongest in terms of showing where the government is saying its balance of priorities is, the fifth test is that they will not release restrictions if there is any chance of a second peak in the outbreak of the virus. So at the moment, the government is saying that economic considerations are not explicitly feeding into their thinking about whether or not to ease restrictions here. However, the Scottish Government, who have control over restrictions in Scotland, came out with a slightly different paper yesterday that suggested they would be looking at economic as well as health considerations as they make those decisions. And there are reasons to be concerned that we might see some permanent economic harms materialising the longer the shutdown goes on for. And some of those may be things that the government will struggle to compensate for, even by tweaking the policy package. And in particular, we might worry about groups like new school leavers and university leavers moving into a labour market where there are no jobs. Evidence from past recessions suggests that those people are likely to see long-term harm to their earnings prospects, and there may be very little the government can do to really recreate the environment of a buoyant labour market for those people. There are also concerns on the business side that businesses may start running out of cash. Surveys suggest that 60% of businesses in the UK may not have enough cash to last beyond 3 months. If businesses don't want to take on significant loans, they may become insolvent instead of remaining in operation. There are also concerns in the longer term about whether very heavily indebted businesses may not be able to rebound buoyantly during the recovery phase. And so obviously a question for government about whether to start converting any of the loan programs into things that look more like grants. So I will leave it there, I think. Thank you.
Brilliant. That's a masterful overview of everything that's going on in the UK at the moment in like 15 minutes. That was amazing. There's so much going on. It's actually you're an amazing communicator, because it's very hard to do. Yeah. We have lots of questions for you guys. So Camille asks Gemma, given the shocks to income, shouldn't we be looking to green taxes to raise additional revenue? I'll turn Barra back on as well. Hopefully. Yep. There we are. Cool. And one for Barra. Are there any standout examples from literature or other countries' welfare systems that you would recommend to guide how the design of the PUP will evolve? Mm-hmm. One for you, Gemma, is framing the loss of jobs using as unemployment, or using the unemployment rate while in lockdown, useful? Or is this a deliberate short-term policy? People cannot, in many cases, should not work. So yeah, the framing of it as unemployment then. Another one for Barra, suggestion for people to retain part of the COVID payment when they go back to work. Will it distort financial incentives for those many low-paid persons who remained in work? The returnees would then be in receipt of higher overall payments. So that kind of, welfare threat thing. Interesting question for both of you, actually, and for Marion. Do you anticipate any public dissent associated with the withdrawal of pandemic payments? One for Barra. For context, Aisling asks, for context, can you please give a sense of how Ireland's existing unemployment benefit system compares to other countries? Ideally in a like-for-like price wages adjusted sense. Jesus, Aisling, that's hardcore. Barra's smart, but wow. Okay, there's a lot to be doing. And for bonus points, this is from Aisling, does the impact of COVID-19 supports improve or worsen Ireland's relative standing for unemployment benefits versus other countries? Wow, that's like an exam question, Aisling. Fair play to you.
Part C.
Yeah. Last question from Ray. I guess this is for Barra. Is unemployment the best description of people on PP? Okay, yeah. So this is kind of the same as the last one. Okay, very good. Okay, Gemma, maybe we'll start with you. Nice, easy questions, folks. Thank you for putting them in. Yeah, very good.
So the first question on green taxes. I mean, taxing anything or anyone will create disincentives. I think, as Barra outlined in his presentation, to the extent that we're going to come out of this with a higher level of debt, which we may need to then try and work off in future, or perhaps with a desire for more extensive public services or a more extensive publicly funded safety net, we may be talking on the other side of this about how do we raise taxes and what should be the distribution of those. We might at that point, and I'm not sure I would do it for quite the reason that Camille was talking about there, but we might, as we go through that process, want to think about the other longer term objectives that we have for our economy. And one of those, certainly in the UK, is to get to net zero carbon emissions by 2050, which is going to require some adjustments to changing incentives for people to use fossil fuels and the like. So it may make sense, if we are thinking again about reforming our tax system or increasing taxes at that point, to think about factoring in, does our current tax structure incentivize net zero in the way that we want it to? But I think I would sort of think about it for that reason, rather than necessarily thinking that this is an easy source of revenues, given that incomes have been hit elsewhere. Should I take all of the ones that
Go for it. Yeah.
So the second question on framing job losses as unemployment at the moment. I think in some ways it's unhelpful, and in some ways it is helpful to think of it as to talk about unemployment. The sense in which unemployment doesn't mean what we would normally expect it to mean is, normally if there's lots of people unemployed, we would think that's putting downward pressure on wages in the labour market, that employers have ready access to people to employ. As it stands, it seems very unlikely that employers are actually doing much active hiring at the moment, and it may well be very difficult, if your business is running, to take people on to employ new people. So perhaps in that sense, the unemployment rate doesn't tell us quite what we would normally expect it to. But I think it is useful to think about it at the moment for a reason that I kind of touched on in my presentation, which is all the sort of economic evidence suggests that unemployment can have long-term effects on your earnings potential. And in particular, it is probably worse for someone to have lost their job right now, spend some months on unemployment benefits, and then need to try and find a new job later on, perhaps with a different employer, perhaps one where their skills aren't quite such a good match, as opposed to remaining on the books of your employer on a wage subsidy scheme. And then you can go back to work with your existing employer, where your existing knowledge of the company, the skills that you have are a good match, and therefore you're likely to be more productive staying on your current employer's books than becoming unemployed and then going back in later on. So for that reason, I think we should be worried about unemployment rates in countries, and particularly we should be worried as the periods of unemployment extend and those sort of long-term effects of unemployment may become more severe. Finally, there was a question about public dissent on withdrawal of the pandemic payments. So I don't know, and I haven't seen good evidence on how large that is likely to be, but I think it is something that governments are going to need to think about. As we come out the other side and start to ease the restrictions on economic activity, there is going to be a real question of whether people do go back to work, whether businesses do open up in the way that the government might be hoping for. If some of the existing pandemic support actually disincentivises businesses from doing that, as indeed it might well do, and Barra set out very clearly for particularly low earners in Ireland, that there's very little incentive for them to leave pandemic support and go back into work. There will be a question for government, firstly, about whether to withdraw those elements of support. That would certainly incentivise people to go back to work, but governments may be nervous of doing that if they were then seen to encourage people back into a situation where there is still a risk of increased transmission again and a second spike of the virus. Similarly, the government could take an approach of changing public information campaigns to try and encourage people to get back out there. But that too would come with the risk that they were seen to encourage people to do something which turned out to be risky for their own personal health.
Wow, great. Okay, Barra.
Yeah, so maybe just to follow up on the, describing, to start off from, is the best description of these people as unemployed? The ILO definition, the International Labour Organization definition of unemployment, essentially stops making sense at this time because it requires that you are available for and actively seeking work. No one's actively seeking work and no one's really available for work at the moment. So the entire conception of unemployment doesn't really make much sense. What the CSO have done here is to essentially classify anyone who was previously kind of reporting themselves as being unemployed as unemployed, but anyone who's on one of the COVID pandemic unemployment payment as not being. And that's, I can see the conceptual difficulties there, but I'm not sure why those who are on the pandemic unemployment payment are different from those who are, say, currently unemployed and were actively looking for a job, but now they can't really. So does it make sense to talk about unemployment? The entire concept is kind of a bit shaky, but I do think it's important to look at the scale of the job losses because these are people who've been separated from their employers. They've been laid off. They're on the pandemic unemployment payment, so they have to be. It doesn't include the cost of people or the number of people who've been furloughed. So I think it is important to think about, these job losses as job losses and maybe think about what can be recovered rather than that we're automatically going back to where we were. There's going to, particularly given how starkly, I think I showed that the food and accommodation sector has been hit. It's difficult to see how that opens up in the way it was for a long, long time. So in terms of the questions directed towards me, there was a question about the standout policies. I'm not sure there's really anything at the moment in terms of what we know works, and this is just so different from anything that we've seen before. But I do think one of the transferable lessons is that avoiding cliff edges is really important. So, if you have a cliff edge, if you say, that you get the pandemic unemployment payment as long as you're not in work or unemployment benefits, but you lose it the second you do an hours of work or get euros work of earnings, that's a bad idea. Yeah. And that will stop people from taking up jobs. This isn't said in kind of a, giving out about work incentives and that sort of type of sense. It's just, we should recognize that there's going to be a real risk, particularly for low earners, in taking back up employment, and that they're going to need a higher financial return to do so if they are putting themselves at risk. And if as well we have the issue of childcare costs, if childcare is going to be more difficult to provide, if they can't drop their kids over to the grandparents because they're afraid of infecting them, for example. So I'm not saying kind of work incentives in kind of a lecturing kind of way, but more about we need to recognize that people are going to need a higher financial incentive, particularly lower paid people, to go back to work. And from that point of view, I think one thing that, as I mentioned, might be worth considering is if there's a lot of uncertainty around that in the first few weeks, say that you're going back, allowing you to retain that pandemic unemployment payment or some arbitrary proportion of it on top of your earnings without it being means tested or can withdrawn immediately. I think that maybe offers an option of trying to provide that ability for people to kind of finance going back to work and take on that risk of doing so. The public, I think, and it is going to be really difficult on the public dissent issue. I'm not sure that there'll be riots on the streets, but it's going to be really, really difficult to draw back and transition out of these supports because they are extremely generous. They to particularly those people who lost their jobs, and they're extremely important. But thinking about how we do exit and transition out is going to be important, and getting that right. And it's good that getting that right is going to be important for not inducing a wide scale kind of protest. Finally, on the comparison, so we actually, a few years ago, we did a bit of work at the ESRI with, actually, when I was working over in London, I was there at the time, and we compared essentially the British and the Irish welfare systems and the support that they provide for different groups of people. And one group that stands out in terms of unemployment benefits being less, Ireland, we're essentially as generous as the UK, just to take one example, more generous in many instances. But one group where we kind of don't provide maybe as relatively as much support is to those with kids. So essentially the Irish welfare system operates that you get your basic rate of job seekers allowance, say, then you get increases for qualified children and increases for qualified dependent adults or dependent children that you may have. And those increases for dependent children are smaller relative states to the UK, but the base rate is higher. So you end up actually, some people end up with quite a similar amount, but those with larger families might end up with less. And so from that point of view, that's one place, and just before all of this, where we kind of stood relative to other. And that we have some work on that. That's on. I can put a link on this chat function, I think, if you're interested in actually, or I'll message you with so you can find out more.
That's interesting because, of course, one of the things that people are talking about is pretty much locked in, guaranteed spike in the birth rate at the end of the at the end of the lockdown period. Although these people are clearly talking about people with no children already. So the two more questions, and then we'll finish up. One for Gemma from Mary Murphy. Gemma, how does the high number on universal credit impact relatively low unemployment forecasts in the UK? So that's for Gemma, and one for Barra from John B. The Green Party have put a universal basic income system on their program for government wish list. Maybe they wouldn't describe it as a wish list, John. Does Barra think that there is a place for this payment in the exit strategy from the PUP? So kind of avoiding that cliff that you just described there. Gemma, maybe you want to go first.
Yes, so the numbers that claimed universal credit, so over the 4 weeks that I was talking about from mid-March to mid-April, 1.8 million people claimed universal credit. And that's out of about 33 million people in the workforce, so that's kind of 5%-ish, if I just got my maths right. So that is probably consistent still with the sort of numbers that the OBR had. If we think that a lot of that unemployment happened pretty quickly, and as I say, it does look like the new claim numbers were starting to tail off. But the OBR figure is also for the year as a whole, so that I imagine they have a spike that goes well above the 7.3 that I talked about. So So I think it is consistent. The OBR numbers came out after those universal credit claims happened, but yeah.
Okay, and Barra, the Green Party is UBI the replacement for PUP?
Well, I'll stay away from recommending what the Green Party put on their wish list, but on the issue of the obligatory universal basic income question on a webinar right now. So in general, I'm quite skeptical of the idea of a universal basic income, because I think either what people are describing is the current welfare system just relabeled, or they are describing something which is completely infeasible. And the reason for that is, I think if you are to talk about UBI, which is feasible, it tends to be a small lump sum payment that is paid to everyone and is universal and is the same. And that doesn't differentiate by need. And I think that poses real issues in terms of having it as a replacement for the welfare system, because needs do differ substantially across groups. People with disabilities, for example, have much higher needs than those who don't. People with kids probably do as well. And if you're going to have it as a replacement for the existing welfare system and not differentiate a need, I think that's very problematic. If you are going to, if you're going to have a small scale, it's not really then a universal basic income. It's just kind of a small lump sum payment for individuals. So I think often there's, in general, I'm quite skeptical of it. In terms of if you want to describe allowing those who are unemployed to keep their pandemic unemployment payment for 2 weeks as universal basic income, I think go ahead. There's usually so many definitions of universal basic income. There's no consistent one that you can, anything can be a universal basic income. So why not this?
Very good. Final word then to Gemma.
Sorry, it's not a very exciting final word, but I just thought I should really mention on the universal credit numbers. In the UK, it's harder than what Barra was doing in Ireland to use those administrative claim data to understand unemployment, because universal credit is also paid to people on low incomes in work. So it's not, you can't translate one-to-one from unemployment to universal credit claims.
Okay, that's a good way. It's a good way to end it. Nice and technical. Nice and technical. That's good. That's good. We're perfectly on time, which is fantastic. Thank you very much for your remarks. Thanks to everyone who sent in questions. Some of them were really tough, so fair play to the panelists for answering them all. I think we got to all the questions, or maybe most of them. Thanks to the several hundred people that logged in and gave their time.